The headlines this morning were stark. The Wall Street Journal: Trump strike kills a top Iranian. The New York Times: U.S. strike in Iraq kills commander of Iranian force. So the market reacts swiftly. Back from vacation, up and at 'em early. I see the futures down 47 ticks at 4:30 a.m. Going to be a rough day. Sure enough, it was ugly at the opening as anchors struggled to make sense of who Major General Soleimani was. What was he doing in Iraq? What's next now that our government has taken him out? I mean, these were all top of mind. One after another, I heard guests speculate that oil was headed for $70, maybe $80 once the mighty Iranian regime retaliates. Some of them made it sound like Iran is more powerful than the U.S. Oh, come on, you heard it too. And what happened? Oil blipped up just a bit. As my friend Rusty Brazil of RBN Energy told me, don't look now, but the forward curve, the most important indicator of where the price of crude is going, where you can buy billions of dollars worth of crude, it barely budged. It was up 43 cents out 5 years. That's nothing. No wonder the stocks of majors like Exxon and Chevron finished down for today. Down! Iran could shut down the Straits of Hormuz, one of the most important shipping lanes for a global oil market. They could blow up more Saudi refineries like they did in September with the drones, yet the market doesn't seem to care. Why not? Because over the past 15 years, we've discovered massive quantities of oil right here in these United States. The moment the price of crude goes up, our producers sell oil futures to raise capital because they have more oil than they know what to do with, and they need some ready cash to ensure they can keep drilling with less and less money. See, the rig count was down 7 today, but they're still drilling. Many of these producers don't have enough in the till. Others are simply trying to live within their means. In short, if Iran takes out capacity over there, our producers will eagerly make up the difference. The world has changed since the days when the Middle East controlled the price of oil. The marginal producer is now the United States. That's why crude has so much trouble getting any kind of lift and really blunts the economic impact of any potential Iranian retaliation, even though, of course, the airline stocks will go down when it happens. Does that mean we should use this Iranian-related weakness to start buying everything in the market? I think we're in a more, let's say, coming into a more complex period. Earnings, and it makes sense to have some cash when the big players come back next week and see that the market's not down enough if Iran decided to retaliate. It's hard to figure out what their next move will be, isn't it? One thing's for certain, though. I didn't hear a soul argue that the assassination had to take place to ensure that Iraq would rule itself rather than being an Iranian puppet state that would commit a lot of mayhem. I don't even know if it's possible, as there are sectarian reasons why Iraq and Iran have gotten real buddy-buddy. But here's what I think is known. Going forward, you need to be wary of analysts who are eager to demonstrate big wins here. Sure, we get a couple of price target bumps for Apple, 1 year anniversary after its vicious pre-announcement. We caught an upgrade of Humana from Goldman Sachs. It worked, important, along with 2 cautionary notes about the Walgreens reports next week. Didn't work, that stock should be lower. But these are all small time. Next week, watch out for analysts and strategists at last back from vacation who try to convince you that the sky is falling because of Iran. Even in the worst-case scenario, I just don't think there's a whole lot that Iran can do to hurt our stock market long-term. Although if they decide to ratchet up their support for terrorism, well, that could lead to some real tragedies. I think the oil stocks, by the way, are already overdone. Now, if you insist on buying oil, I like BP, first bountiful 6.3% yield. My Travel Trust owns it, as well as Schlumberger, another one it owns, for a rebound in drilling worldwide, something that's already happening. You could go with Pioneer Natural Resources for speculation if you're betting that the price of oil will zoom higher. It could also be taken over, by the way. Otherwise, though, I'd much rather play this Iranian situation with the cybersecurity stocks, which are not at all overdone, and sell the conventional defense contractors, the hardware, into this giant leap into overvaluation. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.